Hey traders, today is Wednesday, February 11th, and I'm Michael Boutros, Senior Market Analyst with StoneX, here for a quick multi-time frame look at the Japanese yen. It's been a pretty volatile few sessions. We'll take a look at all three different time frames here. You know, we saw a 4.6% drop off of that January high right into the start of the year. We saw another 3.6% rally into the open of February. And here we are this week with already a 3% decline just off of this week's high. We're poised to mark an outside weekly reversal off of resistance and could be a sign of deeper exhaustion. The focus is on whether we're actually going to break that April uptrend. Key support is going to be right around 152, 151.98 into 154.94. You're looking at the objective 2022 swing high, the 2023 swing high, and a basic 38.2 retracement of the advance off of last year's low. That level converges on basic channel support. It's a 3-point confirmed slope over the next few weeks, and that's going to be critical. A close on a weekly basis below that level would suggest a more significant highs in place and the potential for a larger trend reversal in dollar yen. So really, the stage is set. We obviously have some non-farm payroll figures, which will be out probably by the time this broadcast is made. We have CPI figures into the close of the week, and the event risk is going to be critical for dollar yen. Now, if we drill down deeper to the daily chart, here's what that looks like. You can see that on Monday of this week, we just made an outside daily reversal right off of resistance. Again, that gives us that exhaustive bias to the downside. Here's the drop breaking through the objective February open, which is now resistance. With key support now converging also on the median line over the next few days. So the focus is going to be, as we get into the close of the week, do we hold near-term resistance? And here's what it looks like on the 4-hour chart. If dollar yen is heading lower on this stretch, monthly open resistance should hold near 154.79. You can see that that converges on the 75% parallel over the next few days. That's going to be initial resistance. Bearish invalidation, the level of which, if broken, would have us suggesting the potential for upslope resumption, would be the yearly open. And that converges on the 618 retracement of the January range, that is the year-to-date range, right near 156.67, 156.64. So that's going to be the line in the sand. That's also right close to where we opened the week. So obviously right after those elections, the snap elections in Japan, you did see dollar yen surge right into that resistance at the 2025 high day close of 157.70. And then we turned right lower after that on the Sunday open. So initial support, again, 152 basically into 151.94. A break, a daily close below this would secure the downtrend and suggest that a much larger reversal is underway, in which case you're looking for the July high close, that's 150.74, and then the 50% retracement converges pretty close to the September high close near 149.67, 149.80. So the levels are really well defined on both sides. Keep an eye on Fed Fund futures. Markets are still in the camp of a June rate cut for the next move on interest rates from the Fed, but the April expectation has been getting a little stronger. Let's say that we were at 68% just a week ago of markets clearly expecting a hold for that April read. It's dropping to 58%. We'll see how those inflation figures read. Obviously, that's going to be one of the major prints for this week after non-farm payrolls. We are expecting headline inflation to drop from 2.7 to the 2.5 range, core from 2.6 to 2.5. So the tighter the inflation picture gets, the more willingness the Fed will have to move on interest rates moving ahead. So we will keep you updated as always on MB Forex. Till then, best of luck trading, and we'll see you tomorrow. Cheers.